Okay, folks, keep a trading journal. Keep a detailed record of your trades. Whether you do it in a notebook or whether you use the provided spreadsheet we're going to give you, either way, you want to keep a detailed record of all your trades. There's also programs out there where you can go online, programs like MyFXBook, where you can connect it to your actual brokerage account, and it'll keep all that information for you. It has a lot of nice tools there as well. So that might be something you want to use. It's something I use. Okay, but you want to make notes detailing why you entered and why you exited the market. All right, this is especially good for new traders until you really start to develop those habits. Mark down any mistakes or oversights you may have made and how you plan to correct them in the future. Now, let me just show you quickly here the spreadsheet that we're going to give to you. Okay, just to give you an example here. This is the spreadsheet, and if you've been around Forex Mentor for any kind of time, you might have seen this already. But basically, this is where you can keep track of your trades. You would put the date in here. You could choose a pair down from the drop-down list, your entry price, the method you traded, the time frame you traded, whether you were long or short, and your target. This is where, if you, let's say you have a 100 pip target on the trade and a 30 pip stop loss, this is going to automatically calculate your reward to risk. So you're going to know what your reward to risk is, and over here on the right, it's going to calculate your average target and average stop here over the the course of your trading. All right, so it'll give you your entry reward to risk. Now, once you start to fill in the rest of these values here, especially the actual percentage gained and lost, then you're going to get the actual reward to risk, which kind of works with all of your trade management. So let's just say we had a win. You're going to put a little 1 in that box right there just for a win. And you're going to put the pip gain. We'll just say we hit the entire target here this time. And we were trading standard lots on that. So we'll put that at 3,300. Now you can see this calculates, this changes the value on the account. It calculates the percentage gain or lost, tells you your total trades, and starts to give you your win percentage in here. Okay, so let's just do another trade here, and we're going to say we had an 80 pip target. Again, we'll just use a 30 pip stop loss. Gives us a 2.7 reward to risk. All right, we lost this trade. Now, this is important. We need to put this box, we need to put in as a negative number. Okay, so minus 30. And then over here, we'll put the value. So 30 pips. If we were trading standard lot size, probably about minus 900. Okay, so now you can see it's adjusted the numbers over here. Now you have a 2.4% gain on your account. Shows you the actual gain and loss in dollars, the gain and loss in pips, your percentage of wins versus your losses here, and down here, just a little thing to show you down here. This is actually a risk calculator, so it'll go by the current account value up here. We have to put the pip value in. So if you're trading standard lots, what you do is just come here and you plug in your stop size. Let's say you need a 40 pip stop. It's going to tell you can trade 2.56 lots, okay, at 1%. So you can change the stop size, you can change the pip value, okay, you can also change the percentage you want to risk over here. Okay, so just a convenient little tool built right into the spreadsheet here. Now, just one last thing to show. Let's say we enter into another trade. We have a 50 pip target, a 20 pip stop loss, and this trade breaks even. Okay, so we're just going to put that in at 0 and 0. Now you're going to see your wins right here, 33, losses 33, break evens 33. So what you can do is you can calculate your totals with your break evens here, or if you want to, you can scratch that break even trade. All right, so you just get your wins and losses. I like to keep that in because you know how many times you're breaking even. This gives you the whole picture, but a lot of traders scratch those and don't include break-even trades in their win-to-loss percentage. Okay, I think it's a good idea to keep that there because if you start to have a real high amount of break-even trades, then obviously you're probably going to want to adjust your trade management. Okay, so anyway, just a nice little tool to use if you don't have something else in place.